Guys, good evening. This is Katavas. You're well aware. We are going to discuss process costing. Okay. So if I may share the screen, the guy is kindly mute. Okay. Kindly mute. So what we're looking at briefly is costing methods. That's this topic under cost and management. Okay. Now, costing methods are divided into two. It has saying costing. It's kindly mute. Oh, kindly mute. And any other person who has not muted, kindly mute. Okay, I want to be fast. Just for the purposes of this discussion, I know we're supposed to have FM since the paper coming through, but I thought I should discuss this topic before time comes. So I'm saying have costing methods. There are two types. There's the one they call specific job costing, and there's now this one we are calling process, or sometimes they call it continuous costing. Okay, today's focus is going to be on process costing. Okay, you need to know, of course, characteristics of process costing. Okay, some that stand out is, okay, by definition, process costing, yes, just once more, is the allocation of costs on production cycle. Okay, and for process costing specifically, we are looking at a long cycle. Okay, cycle with many stages. Okay, that's process costing briefly. So if I go back to characteristics, I was saying with characteristics for process costing, the one that stands out is the fact that the output of one process or one stage of process is the input of the next stage of process. Okay, that is one. Secondly, it's obvious that this is takes long. Okay, or I want to say it's the production activity takes long. Okay, compared to the others. And then there's no really customer specification here. No customer specifications. All right. So among the many, those are some of the characteristics. Now, before I talk about work in progress, I wanted us to first have a feel of the first few areas. Okay, the first stages at least before you go to the work in progress. Guys, kindly mute. Kindly mute. So if I may talk briefly about the first stages, you should be knowing how a process account looks like. Okay, we all know how a T account is. If I may just do this, we all know a T account in accounting. Okay, so this is a process account. Okay, so just like the T account, it's not any different. Okay, it's kindly muted. Okay, so with the process accounting, just on the debit side, okay, since this is it's actually a cost account. So the way it behaves, just behaves like an expense account, the way you have expense accounts, that they increase with debit entries and then reduce with credit entries. So any expenses that you incur in a particular process, say stage 1 or process 1, you're supposed to put them on the debit side. Okay, so what I'm saying here is you have things like materials. Okay, material costs. Any costs you incur in material in a particular process should be on the debit side. If you have labor costs, okay, labor costs. Okay, so, and I'm keen to say material and labor, meaning that whether they are direct or indirect, what we call overheads or not, they must be on the debit side. Okay, then you have overheads also. Costs. Okay, so this is an assumption that this is the first stage, okay, or this is the first account. Otherwise, if it was the second stage, you would have what we call transfer from process 1 or from the previous process coming in here. Okay, so allow me generalize that. Therefore, let me actually put it here. Let's say transfer from a previous process or stage. Okay, I hope we are together. Then on the credit side, what you put there is basically transfer or the output. So you normally call it transfer to the next process. Next process. If this was process 1, to go to process 2. Okay, and then you find here things like normal loss if there was. Okay, then we find here things like abnormal loss. That is if it were there. Okay, so just like this side is abnormal loss, even here I have abnormal gain on this side. Okay, why is the abnormal loss this side of the credit side? Okay, so the reason why it's this side is because it's usually if you have say 10,000 in output, okay, and then you're saying you have 200 as normal loss. What it means is, why it's this side is that you didn't just produce the good ones, which are 100 units, but also the loss, which was 200, so that the quantity will always be very close to the one which is the input. Okay, we shall have a feel or a better feel when we're doing a question. Then, because it's a T account, we add, okay, the total is this side must always be equal to the total this side. So, guys, that's how a brief process account looks like. Okay. So, I want us to look at a question and see how this one fills out. So, I have a couple of questions here. Okay, this one has a work in progress. I don't think you'll wait there. Let's first do something simpler. Okay. Okay. There's this question here. I hope you can all see it. Okay, so as I read it, I'm going to try to summarize. Okay, this one has a normal loss. I know you have made questions without normal loss, but this level of ours, and we're BSS students, so clearly you're not going to find a question that is simpler than where you have a normal loss at least. Okay, so there's this question here. I want to try out just the numerical bit. Okay, kindly bear with me. I know it's part A, which talks about the difference between process costing and specific costing. Okay, I think that's part A. But let's put our eyes on the calculation first. Pardon, on the T account. Okay, maybe later. Okay, as we do, you will have a feel. Just kindly bear with me for now, for purposes of time. I hope you can all see the screen, or you can see the words clearly. Okay, so we're going to summarize. So I'm going to start from part B as I read through. Maybe if I read part B, we can see the required. Okay, the required says that prepare the product Z process account. So once they say process account, if you don't have an idea of the format, you are advised to do a different number. Okay, but if you vividly remember what the process account looks like, then feel free to attempt it because it will be always easy. Okay, so let's go to I hope you guys can see the question. So as I summarize it, I want you to follow through. Okay. So here you're mainly looking at the information that you have. Basically, what are my material costs? What are my labor costs? What are my overhead costs? What's my abnormal loss or normal loss? Basically, that's what you're looking out for from the information. Okay. So, okay, I'm a bit fast, but I know we're together on this. Okay. So if I may read through, therefore. Okay, it is saying ABC company operates instead of summarizing as I read. Okay, ABC company operates a process costing system. So clearly here we're talking about process costing or continuous costing. In a period ended September 30th, 2013, excuse me, the company produced product Rolex using two products. We have Ungano, then we have Kaunga. Okay, these are the products that you have. Then they're saying, okay, which were mixed in the proportions of 2 to 4. So meaning that for every 2 units of Ungano, should be having 4 units of Kaunga. Okay. Then they're saying material purchased. Okay. So material purchased prices were as follows. So they're saying 5,000 per kilogram and 1,600 per kilogram for Ngano and Kaunga respectively. So meaning that for our Kaunga, sorry, let me start with the Ngano, which comes first. It will cost us 5,000. Okay. Then for our Kaunga, it will cost us 1,600 for each unit. And then they're saying the normal loss. Okay, the normal loss is estimated at 5%. Okay, you will see how we use this 5%, and has always been expected. Okay, in this process. Then they're saying in this process that ended 30th September 2013, the company manufactured. Okay, so we're looking at our output. Okay, the company manufactured 9,130 kgs of a product. Okay, product Z, and they used from 6,000 kilograms of raw materials. So meaning that the total materials or the total raw materials, let me just say total materials. Okay, these guys used 6,000 kgs only. Okay, 6,000 kgs. All right, and then they're saying conversion costs. Okay, not conversion, no. Conversion costs were 23 M 796,000. Okay, and they're saying there was no work in progress. Okay, at the beginning or at the end of the product. So we don't have work in progress here. So that was the question. Now, I've tried to summarize it, and allow me share therefore what I've summarized so that we do and see how it looks like based on our question. Okay, kindly confirm that you can see my my worksheet. Okay, it said Ingano, the proportions here. These are proportions. Okay, and these cost per unit. Cost per unit. Okay, so this was the information basically, and you have a normal loss of 5%, then an output of 9,330 kgs. Let me just remove the kgs here. put it this side. Okay, and conversion cost were given as 23M. Yes, I put the brackets in the commas. So guys, that is the information. Now they didn't give us labor costs and overheads. They just categorize them as conversion costs. So the total is this. All right. So let's see how a T account will look like. Okay, the T account is not going to look any different. I'm just going to borrow this very one that I drew here. And so I will just copy and paste and just substitute accordingly. Okay, let me even put it here where we're saying what we're taking. Okay. All right. Guys, please kindly respect my class, or I can call it a discussion, please. Let me see. Okay. Kindly, if we are going to be doing this, we need to respect each other. Right? Okay. So I was saying, so our first task is to determine the material costs. Okay. Given the process. So we're given materials as ingano and kaunga. All right. So you may want to split that. You may want to know clearly or to show clearly that the materials we incurred, we had ingano and kaunga. For that reason, allow me put here material. Okay. Our material, you're saying we have ingano. Then have kaunga. So our question is, or we're wondering, let me start, because I need a column for quantities also, so that you see how it's playing out. Okay. So I need a column for the quantities as well, so that we see how or what is happening. All right. So this is my information. Now we're given some small information, like they said clearly that the total materials are 6,000. So meaning that our ngano and kaunga must be 6,000 in total. All right. But in the proportion of 2 to 4. So this is how we go about it. You get the total proportion, which is 6. Okay. This is our total proportion. So, okay, meaning that the 6K represents, or is represented by 6 in this case. So for me to get the proportion for ngano, or the kilos that we used for ngano, just say its proportion, which is 2 divided by 6, okay, times the total material, which was 6,000. All right, as simple as that. 2 divided by 6 times 6,000. Then for ngano, okay, this is supposed to be ngano. Right, produce. Then kaunga. Saying kaunga, the proportion is 4, okay, out of 6. Okay, times the total that we're supposed to have, which is 6,000. So I'm saying these are my quantities or kgs, okay, since we're having kgs. Then we want to know the amount, therefore. Are we together? Because when you add this, you have 6,000. So I'm just add for you. Okay, the 6,000 is coming, or the 2,000 must make the total of 6,000. All right, that's what they say. Total material is 6,000. So you're not going to have 4,000 here and then 10,000 here, and yet, okay, and yet you only have 6,000 to really that you used. So let's look at the amount. The amount, we were given prices, okay, that for each ngano unit, you're paying 5,000 per kilogram. So meaning that if I used 2,000, therefore, it should be 2,000 times the cost per each, which is 5K. Okay, so you do the same with kaunga, that the cost per unit or the cost per kg is 1,600, but I used 4,000 kgs. Okay, so that's how you get materials. And then we add then our for our conversion costs. Okay, this represents the overheads and labor costs. Okay, they were given straight here. They were given as 23, so you don't have to do anything about it, right? So those are my costs so far. I don't have any other costs, and because I don't have any other cost, I just add them to get my total cost. So this is your total cost, and we're trying to respect here the what? The account. So we don't have overhead, so we can't do anything. Abnormal gain, we shall confirm. Okay, I think I should have left some space here for in case of abnormal gain or loss. Let me do that. Okay. So this total will change if there's abnormal gain or loss. So let's go to the other side. Now the other side, we're looking at mainly the output and normal loss. Okay, let's start with the normal loss, which you have the information already, which is 5%. Now 5%, whenever they say normal loss, the 5% is on the input. Okay, input number of units. So therefore, in this case, we have 6,000. Okay, so my normal loss should be loss. It should be the 5% times the 6,000 as our input. So the lost units were actually 300. Okay, guys, please mute it. Please mute. So what's the amount? Zam, kindly mute. Zam, please mute. So for normal loss, the value or the units are valued at the scrap value. Okay, so I didn't see scrap value unless I missed out that information. I can just confirm. Okay, normal loss is valued as scrap value. Take that. All right. So here we are not given information regarding scrap value, meaning that it's valued at 0. Okay, so it's lost. Just you don't have the scrap value, so you value it at 0. Hence, 0 as the amount. Okay, 0 times 300, you have 0. So that's your normal loss. Now, transfer to the next process. Or in this case, it's output, since it was only process 1. So you're not transferring to anyone, but you're saying the final output is, it was given here as 9,130. So just bring it straight. Guys, please. Zam. They're done. Okay, guys, just to, if this continues happening, I will limit my attendance. I need these recordings. I want to make recordings for this. Okay, at least for those who, because I won't be able to have discussions toward the exam. So I need to record this. So if you're going to disorganize what I'm recording like this, it's not going to make sense. Eh? Mute all. Okay. That's the question. The question is in the group. Okay, I've just summarized it. So for those who have joined late, you will see the question later. Okay. Okay, otherwise this is a summary of the question. Once you read the question, you're going to find that this is a summary. Okay, I'll share it again, no worries. So I was saying our output is 9,130. That's your output. But conversion costs. Conversion costs were given, okay, as 23,796,000 total. It was given. So of course, it's on the debit side because it's an expense. So like I said, any expenses will always be on the debit side of the process account. It's not the right time right now. Okay, so guys, this is how you go about it. Okay, but now the how do we determine whether there was okay, so we need to balance the units. Okay, so as you can see this side we have 300, this side you have 9,130. That's one option, that you balance the units to confirm whether there was any other thing that's not accounted for. Alternatively, we have what we call expected output. Okay, the expected output is given by the input minus normal loss. That will give you expected output. Okay, that you say, what was my input? It is 6,000. What is my normal loss? It is 300. So what do I expect? I expect this minus 300. I expect 5,700. But what did you get? You got 9,000. So this is what calls for the abnormal gain. But when you balance this side and add, you have 9,000. But this side you have 6,000. So you must add some units to make the 9,000. Okay. So just me do this. Okay. Okay, I can respond to some of your chats. Normal loss is 5%, 6,000. Yes, we already got that. Somebody was asking a question. Let me confirm. 2 out of 6 and 6,000. Okay. Check asking a question. Yeah, how have you gotten? Okay, a good enough. Someone has answered you. I hope you have understood. How did we get the normal loss? Normal loss, someone has also answered you. Because 6% of, all right. It is 5%. Normal loss is 5%. 5% of 6,000. Then, all right. So good enough. Some people were around and they are responding to your queries. All right. So I was still saying now, okay, my normal loss, okay. We're saying the normal loss was 300. Okay. And we're saying when you add this side, the total is that. Okay, and I'm saying for the side to balance, always balance your kgs or units first. So it's this minus this and this. Okay. So we have a balance of 3,430. And I'm saying this is what we call the abnormal gain. Okay. It's abnormal gain when the output, okay, I mean the credit side exceeds the debit side, which are the inputs. Okay. So, or you can say it is when the actual output exceeds the input. The input exceeds the expected output. Okay. Then you have what you call abnormal gain. When your actual output exceeds expected output, you have abnormal gain. Okay. Right. So, so guys, I hope we are together till this part. How you get the units, and now we are now going to the most important thing, which is determining the cost per unit. Okay, the output and abnormal gain or abnormal loss are valued at cost per unit. Okay, output, abnormal gain or loss, okay, whatever the case may be, are valued at CP, what you call the cost per unit. So we're going to determine cost per unit. The cost per unit is given by the formula. Allow me to write it here. Cost per unit, okay, which is the CPU. It's given by the formula which says total cost minus normal loss. That is if it's valued as scrap value or you have anything like an amount. Okay, then you divide this. Okay, let me just put this whole thing just like this. Okay, divided by the expected output. Okay, if you don't want to say expected output, we know that expected output is given by input minus normal. It was written here. Okay, so therefore my total costs are just these: the materials that you incurred and the conversion costs. Those are that's your total cost. Therefore here I'll come here and say this is equal to, let me just not say equals yet, we're saying 40,000 or 40M 196,000 minus normal loss. Normal loss is valued at 0, so the amount is 0. Okay, this whole thing divided by expected output. Okay, I already have the figure here, but I can choose to say the same as the input, which was 6,000. Okay, 6,000. We're talking about units here. Then minus the normal loss, which was 300. Okay, so down here we're talking about units. Up here we're talking about amounts. Okay, so meaning that my answer therefore for my CPU should be okay, let me have to wrap that later. So it is equal to 40M 196,000 minus 0, so it remains the same. Then divide by 5,700, which is expected output. So this is the value. You can round it off to just one decimal place. To just depend on you really. Okay, or nothing. Okay, so this is my CPU. So you come and divide and the value therefore. You come to your output and you say my kgs were 9,130 times the CPU, which is 7,052. Okay, that's what you get. Then come to your still your abnormal gain, and the value still. You're saying the abnormal gain you had 3,413 units times the CPU, which is 7,052. Okay, so when I now add the new total right now for the amounts becomes 64. Okay, and when I add this side of the credit, automatically they must also give me a total of what? 64. Right? So guys, that is how you do a simple process accounting or process account. Okay, so I can take some questions for now. Why is normal loss 0 up there? Okay, it is 0 because you were not given the scrap value. Whenever you're not given the scrap value, it is assumed that the loss was not valued and therefore it was just dumped or thrown away. Okay, I mean it is wastage, something like that. Okay, because normal loss is valued at scrap value. If they don't give you scrap value, you don't assume it. Okay, it is a 0. Just means that they didn't sell it anywhere else, but they just dumped it. Okay, maybe they put in the dust bin. So hence that's why it's valued at 0 here. I hope I've answered you, Davison. Okay, so if there are not any questions, guys, kindly look out for okay. Okay. I was saying, if there are no questions, kindly look out for the next link. Okay, we are going to now discuss work in progress. Okay, I thought you should understand that and make sure that you have understood, because if you leave now and you have not understood just the normal loss, which is easy, you're going to have challenges when you go to work in progress. Okay, so kindly look out for the next link. which is going to talk about the work in progress, and then we call it process costing. All right. Okay, if I may share the question again. So this is where I got the whole information from. They said everything. Okay, this was the question. They said everything clearly. Someone was asking, where do you get the output? The output is here. They said that the company manufactured. Okay, sorry about that. The company manufactured. Okay, or is it? It manufactured 9,130 kgs of product X. So if the manufactured means that's the output. Then the input was 600. Somebody was asking about conversion costs. Yeah, they were given as this. Okay, the normal loss was 5%. So we picked all this information from the question. Always, before you do, where do you apply it? This figure here is the CPU, the cost per unit. It helps you to value output, strictly output, and also abnormal loss if there is, or abnormal gain if there is. So abnormal gain was valued at 7,052 shillings, and so was our output, which was also valued at 7,052 shillings. Edith, I hope I've answered you clearly on that. Okay. Then, all right, guys. I thought conversion was not considered. Conversion cost, like I already said, they are a typical example of direct materials, overheads. What else? These materials that are not directly attached to the business, to the product. For example, if it was furniture, we're saying that how do you call it? I know it in Luganda, the luau. It's not traceable to the product, but it was incurred. So those are some of the conversion costs. Rent, okay. So all those costs were incurred. That's why they just gave us a figure. Your network is breaking. Are you sure it's mine? Okay. Let's repeat our conversion costs. Okay, I was saying the conversion costs refer to costs that we incur in transforming raw materials into a finished good. So I was saying here clearly, they never gave us a split of labor, overheads, and any other indirect materials. And because they never did that, they just gave us a collection or a complete figure, which they called conversion costs. So all those costs are in there. Okay, so I hope I've answered you. Okay, these are costs that we incur in production or in the process. So they're debited. Okay. All right, guys. So let's see each other again in another link immediately right now so that we continue with our discussion.